Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. The main event yesterday which somewhat confused the markets was the agreement between the US and China to return to the mutual tariffs that were in place before April 2. This means tariffs on Chinese goods will be reduced from 145% to 30%, and on American goods from 125% to 10%. The agreement will be valid for 90 days. According to Trump, negotiations on structural issues are ongoing. As a result, the S&P 500 rose by 3.26%, the dollar index gained 1.43%, and the euro fell by 136 pips. We are not rushing to conclusions and do not believe the euro will continue to fall to the nearest target support 1.0955. Unless the price consolidates below the MACD line on the daily chart. It's a blue line on the graphic. For that, today must close with a bearish candle. The stock market has risen strongly since April 22, while the euro has not embraced the risk sentiment yet. We believe the time has come. A breakout above 1.1110-1150 would confirm a shift in sentiment toward the euro. The next target would open at 1.1276. On the 4-hour chart, the Marlin oscillator is rising ahead of the price, which signals further price growth. Currently, the price is pressing against the lower boundary of the target range, but it needs to break through the upper boundary, 1.1150. Today's ZEW Economic Sentiment Index for May could stimulate risk appetite. And we're starting with pound sterling dollar pair with thin low. On the hourly chart, the GBPUSD pair fell to the 1.3139 level on Monday, rebounded from it, and rose to the 100 Fibonacci level at 1.3205. A rebound from this level will support the US dollar and renewed decline toward the 1.3085 and 3139 levels. A close above 3205 would allow expectations for a rise in the pound toward 1.3344. Recently, the wave structure has been straightforward. The last completed upward wave failed to break the previous wave's peak, while the last downward wave broke the previous low. Thus, the bullish trend is transforming into a bearish one. The pound's decline is not yet strong enough to be called a trend, but over the past 3 months, even such declines have been rare. Bulls will struggle to push above 1.3425 without new statements from Donald Trump regarding tariff hikes or new import duties. Monday's news backdrop once again favored the bears. The pound's decline began last week after the Bank of England cut interest rates. The FOMC held rates steady. The US signed its first trade agreement with the UK and reached a deal with China to reduce import tariffs. These developments have supported the bears, so it's no surprise they launched a strong offensive. On the 4-hour chart, the pair rebounded from the 100 Fibonacci percent level at 1.3435. Turned in favor of the US dollar and is continuing its decline toward the 76% corrective Fibonacci level, 1.3118. No emerging divergences are currently present on any indicators. The ascending trend channel still points to a bullish trend. A bounce from 1.3118 would favor the pound and a potential return to growth toward 1.3435. That's all for today. Wish you best of luck.